Well, good morning, folks. Let's talk about natural gas again. I've got the COT report and the bar chart in front of us. And an interesting thing to note, a lot of people tell me it's very difficult to short natural gas going into December. Well, we've got the seasonal chart on here. Let me zoom in a little bit. And the brown line at the top is the average price for the January contract for the last 5 years. And the green line at the bottom is the current price on the January contract, the front month. Notice that we're at the seasonal average. We're not expensive, we're not cheap compared to historical prices at this level, or at this time rather. And another thing you should notice is look at the chart, the average price going into December, as we are now, we're halfway through, almost Christmas actually. The price actually generally drops going into December and it doesn't rally. It's a weak month. We did a study last year, you may remember it from some of the info put up on X, but I did a month comparison chart. And I think 8 out of 12 months, we did like a 10-year or 12-year comparison. I think it was 8 of those months out of 12 were negative in December. So it's not a strong month for natural gas. And I guess what happens is that there's not a lot of buying in the market in general. I'm not talking about traders, but actual usage. A lot of that's been bought in the lead up to the season. It's much like when Christmas comes along, as it does in this case, and shops are selling their Christmas stuff well in advance, the summer stuff in the southern hemisphere. And then towards about this time of the year, all the summer stuff goes on sale and the winter stuff starts being promoted. So that's for the southern hemisphere, opposite for the north. So what you see is actually the current stock being depreciated in the month when it's most used because it's already been pre-purchased. So that's what we see with natural gas. Let's have a look at the COT report in any case. And we've got the commercials, the long side 583. I haven't got my spectacles. Short side 444. The additions and subtractions roughly the same. Negative on both of them, about the same, 66, 56. So pretty balanced on the commercials, and the producers 215 long, 239 short, so about the same, and the subtractions about the same as well. Actually lightening of positions on both sides of the market for both commercials and producers. So winding down into the season and not as much purchasing, as I said before. The managed money, 177 long, 257 short, slightly biased to the short side, but not much really, and a slight tick up in volume, 8,000 to the long side, 14 to the short side. So pretty balanced as well. So we're not seeing a lot of activity, a lot of movement, a lot of excitement about this market going into December. Non-commercials, 221 long, 361 short. These are more likely to be hedges, so expecting this perhaps to go up because they're more weighted to the short side, adding more to the long side though. Swap dealers 195 long, 33 short, so very much to the long side, perhaps expecting this market to go down. That might be our biggest clue so far. That's the biggest disparity we've seen between the long and the short. And then other reportables, perhaps some of the retail traders, 43 long, 104 short, weighted to the short side, as they should be at these expensive prices, and considering that we're now no higher or lower than the seasonal average. So let's go across to the chart and have a look here. Right, in order to do that, I've got to change cameras because I'm using my iPhone for the internet connection. So let me just pause this. I'll be right back. All right, so now you've got my ugly mug a little bit closer up. This is the 4-hour chart on BlackBull. We made a bit of a mess of it here, I'm afraid to say, and I'm sure I'm not the only one, but let's have a look. It's not a big disaster by any means. We took a very small long position here at the green arrow at around about 3.2. I think you'll have seen that post on X. We then broke down through the support here at 3.13, and not knowing whether this was going to collapse completely, I immediately hedged my very small position. So not only do we have a small position, but I hedged within 10 cents of my original entry point. So that candle closed lower than our hedge, and we got a little bit of profit going on the short, holding on to the long. The next candle, we didn't even get to the 200 period moving average here. The very next candle, well, it just went completely berserk, and we still have our hedge position on. I was hoping to unhedge at 3.2. In fact, I put an exit order for the short trade to take a small loss at 3.2. We never dipped down. Normally, after a big explosive single candle bull run like this, we get a bit of a pullback, like you can see we've done in previous occasions. Normally, there's at least a pullback, and if not, a reversal. The most recent good example being there. So, for example, there's an explosive bull candle, pullback about 25%. So I was hoping we get a 25% pullback here. We didn't, and we just carried on moving up. So we're stuck in this hedge trade now. It's a very, very tiny hedge trade, but it's annoying nevertheless, because if this market is going to carry on moving dramatically higher, then we're going to kind of be left behind without the opportunity to unhedge. However, looking at the COT report, which we've just done, you can see there's no great sort of excitement about this market right now. It's unlikely to blast up to $4, $4.30, $4.80. And it's also unlikely to collapse back down to, $2 or $1.50. So I think we're kind of trading in the middle right now. I'm going to leave this hedge on for the moment, see what happens next, and play it from there. Let's have a look at this on the day chart. You can see that big bull candle after that fake out below the channel line put us into the hedge position, and now we're stuck with this very tiny, inconsequential really hedge, but we may miss the bull run. But like I did say, I'm not too sure if we're going to get any real dramatic movement now. We've had some really good trades on natural gas. We took long there, we got short there, long there, short there, and now at least we've come to an end of the dramatic profits that we've been making. And maybe we'll just have to sit this one out until the contract rollover. Let's look at the Henry Hub price on the NYMEX. So here's the day chart that we've been looking at quite often. And there's the squiggle we didn't quite ever get down to that I thought we might still reach. We haven't done that just yet. We're trading right up here at about 3.34. So yeah, I mean, it doesn't look particularly exciting. We've got a double top there. Maybe this is going to come back down. As you can see from the order book on the COT report, no one's really particularly excited about this market, except perhaps the hedgers who seem to think this market's going short from here. So let's leave that decision in their hands, or that idea. Let's leave it to rest for a day or two. Well, I hope you enjoyed that. There's a funny little outro which I want you to see in order to get you to subscribe to this channel and give the video a thumbs up. And I'll update you again tomorrow on natural gas, or if we should actually alter our trade position here and something dramatic happens. I don't think so though. Take care.
So please like and subscribe and share this channel with your friends. If you do like the content in this video, like, share, subscribe, press the notification bell, and look at the links below.
Natural gas, swing and keep the trade alive. Under the waves where the deals get made. Deep sea hustle, that's the nat gas trade. Feel the pressure, the ocean's tight. Bubbles rising, but the moves feel right. Dive deeper where the treasures gleam. Nat gas flowing, it's a trader's dream. Deep dive, nat gas vibes. Underwater hustle with a profit drives.